Yeah, awesome guys. What's up everyone? Welcome back to the live stream. Welcome back to today's webinar. I hope everyone joined. Maybe we're gonna give it a few seconds for everyone to actually come in. I'm gonna bring in the chat so that I can actually see what you guys are saying. So okay. Welcome guys. So I'm gonna open the chat so that I can actually see what you guys are saying, so that I can be able to interact with you guys. But welcome in. I hope everyone actually joined at the moment. Yeah, that's great. So as you can see the title and based on the thumbnail as well, so today we're going to be talking about moving average, and I want to make sure that so everyone is coming in. Thank you guys for joining. Let's get straight into the video. So as I'm saying, today we're going to be talking about something you have almost seen almost every single day and on almost every single chart, and that is moving average. So but here's the thing. I don't want this to be one of those sessions where we just put on an indicator on the chart and see just two lines crosses and sort of immediately say that okay guys, here's the time to buy or here's the time to sell. That is not what I want us to do today, and that's not what we're going to be doing today. I'm doing good. Welcome into the live stream, Vinod Kumar. Welcome in. So here's what we're going to be doing today, and here's what I want us guys to be doing today. I want us to actually understand what a moving average is, why there are different types of moving average, and what the numbers are, and sort of the numbers or the period is, and also how moving averages can help us retrend, and how they can help us identify opportunities, and how we can use them together with other information to find a better quality setups and to find a better entry. And then we're going to be bringing everything onto the live chart, and so that we can test what we learn, so that we can put all the knowledge that we learn into practice. And so we're gonna test everything live, and then we're gonna take a trade or two to sort of do everything so that you guys can actually understand. Welcome in, Franklin. I saw you. Hi Franklin, welcome in. So we're gonna move to the next thing. I'm gonna open so here's the So what is a moving average? Based on what you can see in your screen at the moment, a moving average, if you never really knew, if I knew to trading, and if you don't know what a moving average is, you have no idea what moving average really is, and if you never really understand trading or chart before, that's very okay. We're gonna open the platform. We're gonna get into the IQ option platform, and I will show you how to identify that and how it works. But just before we get there, the idea is actually very simple. A moving average takes previous price data and turns it into a smoother line on the chart. So the purpose is to make price movement easier to read, and when you are looking at individual candles, especially on a fast sort of time frames, there can be a lot happening. Price can move up, price can move down, it can create small reversals and make the chart look very noisy. So the moving average would help us smooth some of that movement, so we can get a clear picture of the recent direction. And so we're going to take just a few simple examples so that you guys can actually understand. Hi guys, yes, we do have a promo code, and we would reveal the promo code in a very few minutes, so just stay tuned. Make sure that you stay in the live stream. sorry guys, so make sure that you stay tuned, and make sure that you click the subscribe button, subscribe to the channel, and make sure that you click the bell icon so that you will not miss any future live stream that we'll be hosting. And there are a lot of live stream in this channel so that you can learn a lot from other mentors or from other hosts in this channel. And there are a lot of videos that will help you in other fields that you don't understand. So make sure that you click the subscribe button and make sure that you click the bell icon. And if you do not have an IQ Option account, the link is in the description of this live stream, so make sure that you click that link and create your account. But at the moment, just focus on what we are doing. We do have a promo code and we will reveal it in a very short period of time. Absolutely, there's a Telegram channel, and the link to the Telegram channel is still in the description of this live stream. So you can click the description of this video or this live stream. You will find the Telegram channel, so you can click it and it will take you to the it will actually take you to the Telegram channel, so you can subscribe to the channel, you can join the conversations, and if you do have any questions, you can ask in that Telegram channel. It is a live it is a chat group, so you can ask and a lot of people will give you an answer, and we are there as well, so we're going to help you and give you an answer if you have any questions. So that is what a moving average is. A moving average is basically a line that represents the average price of an asset over a selected number of periods. And you can use many periods that you can use. That's very easy, but here's the thing. If you look at what we have currently in your screen, you can just see that it is just a long straight line that just follow the chart. And what do we have around here? Because I cannot. Hello guys, you can hear me, right? Awesome. So as I am saying, if you look at your chart, if you look at your screen at the moment, you can see that whenever the candles touches that line, so this line is the moving average. You can see a line in your screen at the moment, and this line is what a moving average is. That is a moving average. So in a moment I'll actually show you how you can calculate a moving average, how you can actually calculate the periods, and but that is what a moving average is. So before we talk about that, I'm going to show you the different types of moving averages that we do have. So we have many different type of moving averages, and I'm going to open this next slide. So these are the types of moving averages that we have, and here's the thing. You can see that there are almost 3 to 4 different moving averages, because there's not we do not have there's not only one moving average. There are several variations and different moving averages, and with different names and different settings. But the common one you would come across at on IQ Option the SMA, which is the simple moving average. You can see it. And then we have the EMA, which is the exponential moving average, and we're going to be using the exponential moving average in the in our examples today. But I will explain the reason why we're going to be focusing on the exponential moving average, which is the EMA. And then there is also WMA, and that's a weighted sort of moving average, and that's so those are the moving averages that we have. And then there's a smoothed moving average. So these are the different types of moving averages that we have, but we're going to be focusing on just the EMA, which is the exponential moving average. And so EMA basically means exponential moving average, and you can see that in your screen at the moment. So it sort of gives more weight to recent price, so it generally reacts faster to new price movement than as an SMA or other moving averages, even if they do have the same periods. So if you have an EMA, which is exponential moving average, and you have an SMA, which is the small moving average, the simple moving average, and they do have you have them with the same period, the EMA will actually be reacting faster than the simple moving average, and that is the reason why we're going to be using it on IQ Option or on binary options, because it sort of react faster to price movement than the rest of the moving averages. And so that's why we're going to be focusing on EMA. But the point is, there's no one moving average. So and also here's the thing. Even though we do have many different moving averages, and I explained that the EMA is much more faster, but the point is, or what I want you guys to understand, is that there's not it is not just one moving average. There are many different moving averages, and that's why we have the examples here. And also I'm going to talk a little bit about the weighted moving average, even though we can just move forward, but I just want to make sure that that's why we have the title of this live stream as moving average. So I want to make sure that everyone that joined the live stream actually understand what the moving averages are. And so the WMA means weighted moving average, and it also gives you it also gives sort of more weight to recent observations, but it sort of uses a different weighting formula from the EMA. So that's why they are different. And also, as for the SMMA, or the smoothed moving average, they are just designed to reduce the short-term fluctuation and produce a smoother response. So that's why we're going to be focusing on the EMA, because these ones cannot give us the faster reaction that we do need to actually make our trading decisions. And the next thing we're going to talk about are the periods of moving averages, and the numbers that you're going to be seeing. You're going to be seeing moving average, or EMA 7, EMA 12, EMA 14, EMA 20, EMA 50, and EMA 200. And I think the most popular ones are the EMA 50, EMA 20, and EMA 200. And I guess a lot of you guys don't know what those numbers mean, so we're going to talk about those numbers. That number is the period. So I'm going to open another slide, but I want to make sure that we get into the chart in a minute, so that we can sort of show you, especially the guys that are new to the IQ Option platform, and those of you that didn't know how to even use the moving average. I'm going to get into the chart and show you how you can add it in your account, in your trading account, whether you're using your smartphone or you're using your laptop or computer, doesn't matter. I'll just show you, because the view is almost the same across all those platforms, all those different devices. So we're going to be getting into the chart in a moment, but we're going to talk about the numbers so that we can get into the chart and actually test or sort of add a moving average. So the numbers you might be seeing right now, you can see in your screen, you can see the numbers, EMA 7, EMA 14, EMA 20, and EMA 50, and EMA 200. These numbers are the period. So what is a period? A period is sort of the periods used to calculate the number of days that passed. So for example, if you do have a 7 moving average, a 7 period moving average, it would calculate the last 7 candlesticks. So that's what it will calculate. That's what the period is. The period calculate days. So if your candlesticks are days, it will calculate the last 7 days. So if you are using a moving average 7, it will basically calculate the last 7 periods. But and the same thing with the EMA 14. But we're gonna talk. We're gonna take them step by step to sort of talk about what they are. So an EMA 7 uses the most recent 7 periods, and then EMA 14 uses the most recent 14 periods, and then a 50 period moving average uses 50 last periods or 50 last candles. And then here's why the time frame matters. If we sort of have a 1 minute chart and then we have a 7 period, what that means is that we have a 1 minute candlestick, and then we can calculate the last 7 candlestick, and so that's what's going to give you a 7 period moving average, the last 7 candles. And so if we are on a 5 minute chart and we use a 7 period moving average, so it will still calculate, it will sort of calculate the last 20 candlesticks as the period. So the candlesticks are your periods, and whatever the time frame you are using, it doesn't matter. It will just calculate those numbers based on your chart, based on your candlesticks. Now I want you to think about what happens when we change that number. For example, a smaller period moving average react more quickly to recent price movement than a larger period. So that's why we have this period 7 and period 12, period 9 and 14, because they react much faster. Period 7 react much faster than a period 14, and a period 14 react much faster to a period 20, and the same thing with period 20 and period 50 and period 200. So that's what the numbers represent. The numbers represent the last number of whatever number you use. It represents the last number of those candles. So for example, right now we have I'm going to calculate. We have the yellow moving average, which is the period 7. So if we look at the period 7, we look at the yellow period, the yellow moving average, which is the EMA 7. So it will calculate from 1, 2, 3, 4, 5, 6. So for example, say candlestick time frame is 1 minute, so it will calculate the last 7 moving candlesticks. So you can see that it starts calculating from here, and then we reach here. And here's the point: if you have a period 7 and it calculates the last 7 candles, and then another new candlestick pops up, then it will now drop the last 7 candle and start calculating all over again from that new candle. And so that's how the calculation, that's why it is even called a moving average, because it will keep calculating the numbers, but it will not calculate the future candlestick that you have. It just calculates the ones that you actively have in your screen. So if you have you are trading for at let's say 1 p.m. and then a new candle just pop up at 1:01 p.m. So you have 1 minute. Then you're gonna have a brand new candle. So it will now drop the last 7 candle and then start calculating from this one new candle all over again. So that's how the calculation continues. It keep calculating after every new candle. It just start calculating all over again. So that's what we have. Right now we're gonna get into the chart and we will reveal the promo code. But here's the point, guys. I want you guys to stay focused on what we are doing at the moment. I want you guys to focus on the live stream, to focus on the webinar, not on the promo code. And it is 120% bonus code, which you can use, promo code that you can be able to use to get 120% bonus deposit bonus. But you can use that after the live stream, or you can still use it if you're using 2 different devices. You can continue to watch the live stream and at the same time use the promo code. And if you're using just one device, you can just focus on the live stream, and after that you can use the promo code. So I'm going to open the promo code, but we're going to get into the chart in a moment. Here we go. Awesome. So now we have the promo code, and this is the promo code. And if you use it, for those of you who don't know what a promo code is, if you are absolutely an absolute beginner on IQ option, the promo code would help you to increase your balance. For example, if you have $100 and you deposit $100 and you use this promo code, you will get instead of having $100 in your balance, you will have a $220 in your balance. So it will give you another 120% deposit bonus. So that's what the promo code is. And for those of you guys that know how the promo code is, we can't do that, so we cannot be able to announce that. But if you want to learn anything, you can just come back to this Telegram channel, this YouTube channel, and you can learn a lot of stuff in this YouTube channel. There are almost daily or weekly live streams that you can watch in this channel. And if you have any question, if you want to learn any strategy or whatever, you can watch a lot of videos in this channel. There are a ton of videos that you can watch and learn a lot of stuff in this channel, but I cannot sort of give you my personal sort of channel or whatever. Thank you guys for asking. Anyway, we're gonna get back to what we are talking about at the moment. So here's the promo code, and you guys can use the promo code anyway. And we will now add the moving averages that we're talking about. At the moment, I have another moving average, but you cannot understand that if you don't know what we're talking about. So I'm going to remove that we would close all these currency pairs, and then we would sort of add new ones in a moment. Okay, here we are. So I'm just removing these currency pairs because we cannot be able to trade with them. The markets are sort of closed, so we're gonna add another new currency pair, the ones that are not an OTC market, because we can't use the OTC market. I'm gonna come here. Well, I guess we can use it. Yeah. Okay, guys. Here we are. So I'm gonna remove the chart type, change it to line chart, so that if you didn't actually know how to use it, you can learn how to do that. But still, if you don't know how to navigate the platform, we have you can watch our previous webinars, our previous live streams. You can learn how to navigate the platform, and if you don't know how to use the platform, you can still watch another videos within the platform. Right here you can see this section, tutorials. You can watch it, and you can learn everything, how to trade. Here's the interface guide. You will learn everything, and there are a ton of videos that will help you with fundamental analysis, technical analysis, margin trading, contracts trading, with the basics of the platform and the basics of trading. There are a ton of videos that will help you. And still, in this YouTube channel, you can watch a lot of videos. There are a lot of videos that will help you understand how the platform works and how you can navigate the platform. But here's the thing: if you're a new beginner, and if you're sort of new to the platform, this is what you're gonna see right after you open the platform. So the first thing you're gonna want to do is you're gonna change this chart type. But the first thing you want to do is deposit money into your account. So you're gonna come to this section, click it, and you can deposit money with whatever. There's a scale here. You can deposit $10, $30, $20, $100, whatever amount, $1,000. You can click it, and if you want to use the promo code, you can just come to this section and add it. Here's the promo code with first, right? Here's the promo code. It is first 20 AF. So right now you can see, if you click apply, I guess I made a mistake, so I'm gonna see. I didn't add what's that? Okay, there's 120. I put 20. Sorry guys, that's my bad. So right now, first 120 AF. I guess we do have a problem around here. First 120 AF. Well, maybe a lot of you guys have already used the promo code, so it is no longer valid. But I'm gonna try again and see what is actually happening. But the first thing you're gonna do is you're gonna actually come to the your account and actually deposit. So it is so I guess you guys have already used the promo, because I was trying to use the promo code and it is no longer valid. So I guess you have already used it. So well, that's really, so you guys, wow, you guys are actually very fast, like really fast. So I guess a lot of you guys have already used the promo code, and that's crazy. I didn't know you are this active on the promo code section, but it is actually limited to just 50 users. So the first 50 people that actually use the promo code are the ones that are gonna get the promo code. So let's get back to what we were talking about. Let's get back to what we are doing. So you come to the you're gonna come to the chart tab after you deposit whatever amount. You're gonna come to the chart type, you click it, and then you're gonna change it to candlesticks, because that's how you're gonna be able to understand the market and what's happening in the market. and now we change the candlestick. So we're going to change the candlestick expiration time to 1 minute, so that we're going to have a better time frame that we can be able to read the market. So now we have a 1 minute candlesticks, and what this means is that after every 1 minute we're going to have a brand new candle. So that's what the candlestick time frame means. It means that after every 1 minute you're going to have a brand new candle. So if you want to add the moving average, you're going to come to this section, you click indicators, and then you search for moving average. You just search it, moving average. You can see it around here. You just click it, and here's the thing, we're going to change the period. Now you can see the period is already at 14, so we're going to change it. The first candles, the first period we have is actually the period 7. So we're going to change it, and the color of that period 7 is actually yellow, so we're going to change the color to yellow. And this is an SMA, so you've already know what or you are already familiar with an SMA, which is a simple moving average. So we're going to change it to the exponential moving average. So here's the weighted moving average. We're not going to use that. Here's this simple moving average. We're not going to use that as well. And here's the smooth moving average. We're not going to use that as well. So we're going to use the EMA. And so you just click exponential moving average, and you're gonna you wanna need to thicken the lines around here so that you can see the lines clearly. So we're gonna thicken the line, and then we're gonna click apply. So now we have the moving average 7, and here's how you can understand how it works. Now if you can see the moving average 7, what it helps you do is that it helps you sort of understand a bullish trend and a bullish market, and then a bearish trend and a bearish market. And as you can see now, the market is sort of in a bullish momentum. Or if you're not familiar with that phrase, you can see that the market is now actually going up, and the market is just going in an upward direction. So that is what a bullish momentum or bullish trend means. It basically means an uptrend or an upward trend, or the trend is going in an upward direction. And you can see that the candles are actually above the yellow moving average. So that's what it is indicating, a bullish momentum, when the candles are above the moving average. If we zoom out around here, you can see that the candles are below the moving average 7, and that is indicating a bearish momentum, or that the market is actually going down. And if we zoom out, you can see around here the market is going down, and the candles are below the moving average, and around here the market is actually going up. If we zoom out a little bit, you can see around here we have a bearish momentum. From here the market is coming from around this section. We have a sort of selling pressure around here, and it sort of pushed price very low. It pushed price down, and the market began to decline from there, and the market continued to go in a downward direction all the way here. And you can see that the candles are below the moving average, and this is a moving average 7. And what the moving average 7 do is that it calculates this 1 2 3 4 5 6 7. So it sort of calculates from here to here, and then right now you can see that we have this 1 2 3 4 5 6 7. So now that we have a brand new candle, it would drop this last 7 candle and start calculating all over again from this new candle. So that's how it kept updating. That's how it kept calculating. So it sort of calculate the number of candles that we already have, and give you the number, whatever the number that may be. So we have some people around here. Well, if you deposit $10, you're actually gonna get that's $12, which is 120%. So you're gonna get $12 if you deposit $10. And just try the promo code and see if it will work for you, because I guess a lot of guys have already been using the promo code, and it is actually for the first 50 people that use it. So you're gonna I want you guys to actually, I don't want you guys to sort of distract yourself with the promo code and leave what we are doing, even though you can come back later and watch. But it's very important to watch to the very end, because if you do have another question, you can actually ask me live and I will give you an answer. And so if you didn't have that question, or if you're not live, you can ask that question, even though you can ask us in the Telegram chat group. We're gonna give you an answer. And yeah, so we're gonna move forward with our explanation. I guess a lot of you guys understand how the moving average works, so we're gonna move forward with the rest of the moving averages. And the next moving average you're gonna add is the 14 moving average. So we're gonna come, you can see the moving average around here, you're gonna add it, and you can but here's the thing, I just come here to show you how to add the moving average, and to show you for those of you that didn't clearly understand how it was. So there's a lot that we're going to explain. I do have some other slides that I want to open up, so we will leave the chat in a moment and open those slides, and then we would come back to the chat in a minute. So here's this one that we're going to be explaining at the moment, which is the SMA versus an EMA. Now I want you guys to look at your screen and look at the SMA, which is the simple moving average, and then the exponential moving average that we just used at the moment, because this is one of the most important differences for today's session, and that's why I want you guys to understand that. Because when you open the IQ option platform, you went to add a moving average, the default setting is already in the simple moving average. So that's why I want you guys to understand the difference, because sometimes you will just click the moving average and it is automatically on SMA, and you just click apply. You will be using the simple moving average, not the exponential moving average. And the simple moving average, or the SMA, it gives equal weight to the price included in its calculation, but the EMA gives more weight to recent prices, and that's why the EMA is faster, because the EMA generally react faster with the with sort of the market statistics, or the market changing direction, because you know the what do we call it, the binary options market react very fast. It shifts sort of very fast, and so the exponential moving average tries to capture that and tries to follow that that speed of the market to give you those details as fast as possible. So even if you have the same 7-period simple moving average and 7-period exponential moving average, the EMA will generally respond to that new movement sooner than an SMA with the same period will. And so the faster the response is useful when you are trading. It can also, even though it is sort of the moving average is sort of at the same lines, but the faster the moving average is, I guess the faster the information that you're going to be looking for in order to make your decision, because sometimes you want to have that fast movement because you are trading binary options. And when you are trading binary options, you need to do everything quickly, because every second matters, every minute matters, and that's why you're going to be using the exponential moving average. But even the simple moving average would give you similar calculation, except that the simple the EMA will move more aggressively, and it will give you far better information, faster information than the simple moving average. And that's why we are using it on binary option. And so you can see the differences, you can see the lines. I'm gonna zoom a little bit so that you guys can actually see it clearly. You can see that the simple moving average moves, but it doesn't react faster than the exponential moving average. You can see I'm gonna reduce my, I guess I'm gonna move it a little bit so that you guys can actually see what is there. So yeah, so you can see that the simple moving average, they are the same lines with the same period. They are both period 20, but the SMA moves a bit slower than the exponential moving average. You can see that the exponential has already bent, but the simple moving average bends a little bit, but it is just not going down. And so that's why you're going to be using the exponential moving average, because the SMA actually react slower and the EMA react much faster. And so that's what we're actually talking about. And this is just the difference. The difference is very clear for everyone. The difference is just that SMA is slower and the EMA is just faster. So I'm going to move to the next slide, and then after that we can actually move back to the platform so that we can test them, and then we can use some examples. So I'm going to I will leave this like this, but I would just zoom it a little bit, just increase it like this. Well, so here's the next thing we're gonna be looking at. So I'm gonna move it. So you can use the moving average to sort of read the market trend, and you can see right now in your screen. So I'm gonna move this to this side so that you guys can see your screen clearly. So when you see the bullish trend, we use the moving averages to sort of track down or to read the chart itself, or to read the market trend. And you can see that the market is in a bullish momentum, or the market is in an upward trend. And what an upward trend is that you would have a higher highs and higher lows. The market is just going up and it is creating a higher highs and higher lows. And so you can see that whenever in this example, in the bullish trend, you can see that whenever the candles touches the moving average, you can see that it reverses and continue going up. And so whenever the moving average is the chart touch the moving average, it just reject that level and continue going up. So we use that to sort of measure or to read the trend. So as you can see around here, we can clearly see that this is an upward trend, and we use the moving average to test that. And this gives us sorry guys, so this gives us an entry level, which means that whenever the price touches this level, the market will just reverse and continue going up. And whenever it touches the moving average, it will just continue going up. And whenever it touches again, I'm going to take some water because my voice is sort of sorry guys. So just like you can see right now in your screen, and we're gonna get into the chart and look for this similar example, but I guess you now have a basic understanding of how this works. So for the bearish trend, you can see that whenever price touches this level, it sort of becomes like the resistance level. It just continue going down. And a bearish trend is when the market will create lower lows and lower highs. So bullish trend create higher highs and higher lows, and bearish trend create lower lows and lower highs. And if you want to learn more about the chart pattern and the market trend and all of those things, you can go back to our previous live streams or webinars, and you can watch that. And if you want to learn a lot about trading, if you want to learn whatever you have question, you can there are a lot of videos in this channel, on the IQ Option Education channel. You can watch those videos, but make sure that you click the subscribe button and make sure that you click the bell icon so that you will not miss any future live stream that we're going to be hosting in this channel. Thank you guys. So we're going to continue with what we're talking about, and we use the moving averages to sort of read the trend. And we read it just like we use it to read the bullish trend. We're going to use it to read the bearish trend. And you can see that whenever the market touches this level, the market just go down. Whenever it touches this level, it just reject this level and continue going down. And we can use these levels as our entry point, but we're not going to just focus on the moving average itself. We're going to use other factors to sort of make our trading decisions, and we're going to learn that in a very few seconds. But this is just to show you how you can use the moving averages to read the trend. So we read it. We read the bullish trend around here, and we now read the bearish trend around here. And the market continue to go in a downward direction or in a downward trend. And so the last one is the consolidation. And the consolidation means that price is just moving sideways. You know, it has no clear direction, and you can see that the moving averages are just flat and tangled with one another. They just didn't have a clear direction, just like the price have no clear direction. So that is a period of consolidation, and at that period, the best thing you're going to do is to be patient and to wait for a clear direction and for clear entry. So we just use them to read that. So when you have your moving averages just crossing one another and sort of having no clear direction at that moment, it means that the market just haven't decided yet on what direction to take, and so you're just going to be patient and wait for a clear direction. So we can now use the moving averages to read the trend. So the next thing we're gonna do, I have another one slide I want to show you in a second, and then we're gonna get into the chart back again, and then we're gonna add those moving averages. And yeah, so the next one we're gonna talk about is the moving averages, using the moving averages as areas of values. And in a trend, price tend to return to the moving average before continuing in the same direction, just like you see when reading the when reading the bullish and bearish trend. And as you can see right here, we have an uptrend, and we are using a moving average 50. And you can see that whenever price touches this level, whenever price touches the moving 50 moving average, it just reject and reverse and continue going up. And whenever it touches, even though the market just going in an upward direction, but whenever the price come down and touches, so you can see around here we have a higher high, and then we have a higher low here, we have another higher high around here, and we have a higher low around here. And if you move up again, you have a higher high and we have a higher low. So the market just kept printing higher highs and higher lows. And that's how you sort of identify an uptrend. And in an upward trend, the market uses the moving average to reject and go back to create a higher highs. So we use this as our entry level, and that's why we use it as areas of values. So that's how we use it. So now we're going to get into the chart in a minute and look for the rest of the EMAs, and then we're going to come back. I have few more slides to look at before we leave, before we finish the live stream. So let's get back into the chart because I have some interesting stuff to show you guys. Yeah. So I'm gonna increase my the camera a little bit so that you guys can actually see me clearly, right? I guess this is fine. So getting back to the chart, now we have the moving average with period 7, and we're just gonna test when the examples that we just talked about. So we're gonna add period 50. So you come back to the indicator section, you just click it, and you search. Here's the moving average. You can just search it if you didn't see it, and the period is gonna be 50. So we have period 50, and then we're gonna change, just like I said, the default setting on IQ option. The default setting is just SMA. So this is very important for you guys to just focus on that, because sometimes you're gonna make a mistake and add SMA instead of an EMA, and that would slow your decision making process. So it is worth looking at. So we're gonna use this color just like we have in that slide, and then we're gonna tick in the line like I said, and then we're gonna click apply. So now we have the moving average with period 50, and here's the thing, we're gonna try to find yeah, this is what we are talking about. And right here you can see around here price reject this level, and then price start going in a downward direction, and then it comes around this section, and then it got rejected and continue going in the downward direction. And around here you can see that the price tries to come back to the moving average 50, and it got rejected again, and then it comes down. And you can see that you knew that we have a 1 minute expiration time, so this represents 1 minute. So this is 1 minute, 2 minutes, 3 minutes, 4 minutes, 5 minutes, and here's 6 minutes, and then here's 7 minutes. And this is period 50. So we are using a period 50, and the period 50 actually calculate the last 50 moving averages. But before we get there, we're gonna come back to test what we are talking about. So around here you can see that price come back. It even tried to pierce out of line 50, but then price come back and continue coming down, and it come back again, create a higher low, and then come back around here and create a lower low around here, and then try to come back. And this is where the interesting thing happened. Here's the interesting thing, because around here you can see that the yellow moving average crosses above the 50 moving average, or the orange moving average. And wherever we have this cross, and you can see that now price went because before the chart the candles are below the yellow moving average, and around here you can see that the moving averages are the chart, or the candles above the moving average, and that is, as we said, is indicating a bullish momentum. And you can see that price start going up and then it come down around here, got rejected, continue going up, come down around here, continue going up, and around this section you can see that we have another cross. So whenever the moving averages crosses one another, if the yellow moving average, which is the faster moving average, crosses above the slower moving average, which is the 50 moving average, it means that the market will start going in an upward direction. And when it crosses below the 50 moving average, it means that price is gonna kept falling, or we're gonna have a bearish momentum, and then the market will continue to go in a downward direction. So look, just like I said, that's how we use it. And around here you can see that we use this to sort of read the trend around here. The market just going down, but that's not a clear trend that we can be used, just like we have around the last example we have. So that's why we use it around here actually, to sort of test the market when it's going down. So yeah, when I'm using that as actually, okay. Yeah, and we talk about the consolidation, the period of consolidation. Around here you can see that just the moving averages are just flattened and sort of tangled with one another. They're just moving up and down with no clear direction. And I'm going to use something like this, some graphic tools to I don't want to use the lines, I guess. I'm looking for something else, but well, we're going to use these lines, but I'm just using them not as an example actually, and we're going to remove them in a moment. But what I was trying to actually show you guys is this section where price is just the market is in a period of consolidation and there's no clear direction, and around here it is worth waiting. You don't have to open any position around this section. You just have to wait for a clear entry. And around this section you can see that now we have a clear direction, and then from here the market just start going in an upward trend, and that's what we are talking about. You can see that the market just start going up and we have a bullish momentum from here. So it is worth waiting when the market doesn't make any decision. So that is what we are talking about. And apologies for using the Fibonacci lines. That's not what I was just using it to sort of show you guys an example of a period of consolidation like we have in the last slide. But around here you can just see that the market is in a bearish momentum, and the market reject this level, start going down, try to come back to that level, come down again, try again, come back, try at this level, come back again. It tests around here, and again it got rejected, and the market just continue going in a bearish momentum. So all the things that we just have in that slide, we have them clearly right now in the chart. We have them in a live example. And again, like I said, around here you can see that around here we have the cross. The cross happened around this section. The yellow moving average crosses above the orange moving average, and the market just start going in an upward trend, in an upward direction. And this is a clear signal that the market would start going in an upward direction, and that's what we're talking about. So we're gonna get back to those slides. I have a few more slides to show you because we're gonna test. But still, we haven't used the moving average 20 and moving average 200. So we're gonna talk about that in a minute. Moving average 200, change SMA to EMA, which is the exponential moving average from the simple moving average, and then we're gonna tick in the lines. I'm gonna leave the color as red, and just gonna zoom out so that we can see it. And around here you can see that the 50 moving average, which is the orange moving average, so the 200 moving average is the most slower moving average. It reacts very slow to the price movement, and we use it in a long-term trade. If we are taking a long-term trade like 10 minute, 30 minute, 50 minute, 1 hour, or longer. So we use the 200 moving average if we are having a swing trade or a long-term trend. But for the quicker trend, like 5 minute, 3 minute, 2 minute, 1 minute, we use the faster moving averages, which is the period 7, period 9, and period 14, whatever. So you can see that the 50 moving average crosses above the 200 moving average around this section, and you can see that the yellow moving average crosses this candle and start going in an upward direction because it reacts faster, and that is what we need. And you can see that the market just began going in an upward trend. So this is the clear signal of a bullish trend that the market will continue to go in an upward direction. And this signal around here signal to us that the market would continue going in an upward direction for the long term. So that is why we have these longer periods. If we are taking for like 15-minute trade or 5-minute trade, this is indicating to us that the market would continue going in an upward direction, even if it have some, it can come down maybe in the next 3 minutes, 5 minutes, but still the market is in a bullish momentum and the market will continue going in an upward direction. So we're gonna get back to some slides, and then we're gonna add a few more slides, and then yeah. So I do have another slide I wanted to show you guys. So I'm gonna open it and close the chart, and here's what we're talking about. We use the moving averages as areas of value. So I have to show you the real example on the chart, and now this is what we're going to be talking about. And I guess I'm going to move my my camera around here, and so that we can see this crossover, and I'm going to minimize it still a little bit. Okay, this is fine. So we are talking about EMA 7 and EMA 14. So I haven't added the EMA 14. We added EMA 50 and the rest. But this is our setup. This is one of my the simplest strategy. And here's the reason why we even have the live stream when we talk about moving average. The reason why we talk about moving average is because moving average is very simple to understand and very easy to use. So even if you are a beginner, you do not understand technical analysis that much, it is very easy for you to understand a moving average and to use it than other technical indicators and other technical stuffs. And so that's why we are using it, and that's because it is very simple and very easy to use, very simple and very easy to understand as well. So the strategy here is we're going to use EMA 7 and EMA 14, which is why we call the strategy the EMA pulse strategy. And our core trend following framework is built on these two exponential moving averages. When we have the EMA 7, which is the faster moving average, you just saw the examples, crosses above the 14 moving average, even though 14 moving average is faster than 50 moving average, but we use this strategy for a very quick entries, for like 3 minute and 5 minute entries. So we use this EMA this strategy, and that's why we use EMA 14, so that it will react faster than period 50. So when we have the EMA 7 crosses above the EMA 14, it is indicating that the market will start going in an upward trend. And around here you can see that the EMA 7 was above the EMA 14, and they are both going in an upward direction, and that indicate a bullish momentum. And if you place your order around here, it would be a successful order for 3 minutes or 5 minutes, because think of these candles as 1 minute candles, and from here you can see 1, 2, 3, 4, 5, 6, whatever. You have already won the trade. And for the bearish momentum, when the 14 moving average crosses below the when the 14 moving average crosses above the 7 moving average, or the 7 moving average crosses below the 14 moving average, it means that the market will start going in a downward direction. And around here you can see that when the cross happened around this section, the market just started going in a downward direction, and that is when we have a bearish crossover. The bearish crossover is when the 14 moving average crosses above the 7 moving average, and the Bearish crossover is when the 7 moving average crosses above the 14 moving average, and the bearish momentum is indicating that we're going to have a bearish movement, or the market will start going in an upward direction, and the bearish one is indicating that the market is going to go in a downward direction. So that's why we have them. And the next thing we're going to talk about is the RSI, because this is going to help us to confirm how strong are the buyers, how strong are the sellers, and that's why we're going to be using the RSI confirmation. And this is just an added bonus to the moving averages. So what is an RSI? So an RSI really stands for relative strength index, and we use RSI to confirm the momentum strength and to avoid sort of low probability trades, and to avoid losing money or entering trades that will end up in a loss. So around here you can see that we have the cross which happened around here. I'm going to bring back that slide. You can see here's where the cross happened, and you can see that the moving average is above, the RSI is above line 50. So RSI has 3 lines. We have line 70, you can see the line 70 around here. We have line 50, you can see it around here, and we have line 30. And what line 70 means is that this line 70 is representing the buyers, line 30 is representing the sellers. So when price is above line 70 represent the buyers, and line 30 represent the sellers. When price is above line 50, it means that the market, the buyers are in control, or the price is entering buyers territory, and now buyers are about to start taking control of the market. And when price is below level 50, it means that the price is about to enter sellers territory, or the price is about to the sellers are actually about to take control of the market, and that the market will start going in a downward direction. So you can see that when the cross happened around this section, it indicates that the market is actually going up. You can see that RSI is above line 50, and when RSI touches line 70 and crosses the line 70, it means that the market has now reached an overbought level. It means that now buyers are exhausted, and price is more likely to start reversing and start going in a downward direction. And when you have price touching line 30, it means that sellers are exhausted now. It means that price have reached oversold level, and that there's a possibility of a reversal. Price is more likely to reverse and start going in an upward direction. So when you're going to open your trade, make sure that price is above line 50 or price is below line 50. Depending on if it is a bullish trend, price is above line 50 and vice versa. So that's how we use RSI, and that's what RSI is, and that's what RSI stands for. So this is when not to trade. But before that, we're gonna we're gonna talk about this before we get into the chart again. So this is when not to trade. When price when the market is in a consolidation period, it means that there's no clear direction. Do not open any position. Do not enter the market, because you might actually end up losing money. So I'm gonna move this so that you can clearly see what that was, but I guess you can see it clearly anyway. So I'm gonna bring this camera below, because yeah, so my background is white and I sort of fade away. But anyway, you can see that the next thing is that when the moving average is sort of tangled and around each other, or tangled with one another, whatever, they are just crossing up and down, they have no clear direction, it means that the market has no clear direction. So that is a period when you're going to be patient. You have to be patient, and you have to wait until you have a clear direction before you make a decision. And the last thing is that when the conditions are very weak, you can see that the two moving averages sort of collided with one another, and they're very close to each other. There are no space between period 7 and period 14, or period 7 and period 50. And so you have to make sure that if you are using 3 different moving averages, there's gotta be a space between those moving averages. There's got to be a space between those moving averages. If there's no space between the moving averages, do not open that moment, because it is a very weak moment. The signal is not strong, and there's a possibility that the market would either make a reversal and you're gonna lose your money, or just try to avoid that. So do not trade at that moment. And so that's what we have, and this is when not to trade. And at the end we're gonna talk about this, and then we're gonna just open the chart. So this is the setup checklist. So I'm gonna move this upward so that you can see what was there. So I'm gonna move the promo code to this section, and now you can see the details. So this is the setup checklist. For the first thing is you look at the trend. Is price above bullish or below bearish moving average, exponential moving average, of course. Apologies guys. And then the next thing you're going to look at is the EMA 7 and the EMA 14. Are they aligned in the same direction? Even if they cross, are they going in a downward direction, or are they going in an upward direction or not? So you have to look at that. And then the crossover, you have to look at the crossover. Did EMA 7 cross above or below the EMA 14 as your checklist? And then the last thing the next thing you're gonna think about, look at, is price at a strong support or resistance area. So that's very important to look at. And then the market condition, is the market trending? Is it not consolidating? Make sure that when you're gonna open your position, the market is not consolidating. The market is actually trending either upwards or downwards. And then the last but not least that I kept emphasizing almost every single day on almost every live stream is risk management, because I was always emphasizing you guys to protect your capital at all costs. When you lose your capital, it is actually a game over for you, and you are no more in that game. So it is very important to have a very clean and a very clear risk management that would help you and protect you against your own self, and protect you against your own impulses, and help you protect your capital. Because whenever you lose your capital, it is basically a game over for you. So it is worth depending and protecting your capital at all costs. So I'm gonna get back to the chart and look for those examples, and then we're gonna make some few decisions. Take some trade or two, even though we're actually running out of time, but we still have a couple of minutes left. So we're gonna, if you want to add another chart, you just gonna another currency pair, you just click this open new asset. You can add whatever GBP USD. If you want to trade crypto, you can whatever. There are many assets that we can use. Just add some high volatile asset, GBP USD, sort of like the asset. So I didn't find it. GBP USD. It is not trading at the moment. Here's GBP USD. So and then we're gonna add either AUD. So this is the Australian dollar against the United States dollar. And wow, around here we have an interesting moment. So we're gonna add the RSI. Sorry guys. So if you want, just like the moving averages, so if you want to add another indicator, you're just gonna come back to the indicator section, just click it, and then you search for RSI. And so here's RSI, which is the relative strength index. You just leave the default setting, just click apply, and now you can see here's the line 70, here's line 30, and you can see price is around the overbought level. And so we're not gonna open any entry around here because there's a possibility of a reversal, but we're gonna look for another entry in on GBP USD, and we didn't have RSI around here, so we have to add it. So now we can see that RSI is above line 50, but we do not have the cross, so we're gonna have to wait for the cross to happen before we make a decision. Had it been we open around this section, we can actually make a decision from here. We can open the trade, and you can see that the market is going up at that level, but we missed that moment. And that's why it is very important to have the discipline and the patience to wait for a clear setup, for a clear entry before you open a position, before you open a trade. And so we're gonna come back here, and we have a cross around here, and so we're gonna add RSI. So here's RSI, we're just gonna add it and then apply. And now we can see that price is above line 50. The cross is happening, but we can see that both lines are not looking up, they are actually now looking down. So that's why we're not gonna open a position, and unless we have a clear entry, unless we have a clear signal, we will not open a position. Otherwise we're gonna end up losing money. So we're gonna leave this section for this currency pair in a minute and look at pen USD. So I'm just gonna add RSI. So RSI, and now we can see that price is below line 50 and the cross didn't happen yet. But here's the thing, it's my bad, I'm not actually using the RSI 14. So I'm going to go back and add RSI 14, change not RSI, moving average. So I'm going to change it to exponential moving average, just thicken the line, and I can leave the lines as red but just make it reddish like this. So right now we can see that we have the cross around here. RSI 14 crosses above RSI 7 around here, and we can see that price is below is below line 50. So our entry level is this section, but we missed that entry, and still we can open another position depending on what happened. But you can see that the moving averages bend or sort of look down, or they are actually going in a downward direction themselves, even though the cross happened around here. But you can see that the moving average is actually going down in they're just going in downward direction, and that is a bearish signal. It is signaling a bearish momentum. So we're just gonna open a 3-minute entry. So we're gonna open a 3-minute entry, even though we have some signals around here indicating that the market might actually make a reversal, but still looking at the so we do not open this position, but still there's a possibility the market would just continue going down. So I'm going to look for this section, and around here we have a cross happening around this section on GBP CHF, and we can see that okay, we do not have the RSI 14, so I'm going to add it in a second, change it to EMA, and just reddish, and just sort of thicken the line. And then now we can see so the cross is just happening, and RSI is just above line 50, and so we're just gonna open a trade in a 3-minute, and then we would leave the chart. We're gonna close the live stream. And so guys, if you do have any question, you can just go ahead and ask. So around here we have the cross, and we're just gonna open a 3-minute position, and we put $10 for 3 minutes, and we're gonna wait and see what's gonna happen for the next 3 minutes. The reason why we open a 3-minute position around here is because we can see that RSI is above line 50 and is heading towards line 70, which is the overbought level. And we can see around here that the yellow EMA, which is the 7 EMA or the faster EMA, has crossed above the 50 EMA, and it is actually going in an upward direction. And not just that, but we should have wait actually for the 14 EMA, but that's not a problem. We can zoom out and we can still see that the market has a bullish chance to continue going in a bullish momentum. So, oh, apologies guys. Wow. Apologies guys. So I didn't see someone saying nothing is showing. Guys, I'm so sorry. I'm so sorry guys. I have no idea it is not showing. So but now we can see it clearly. So I'm gonna explain again the reason why we open a position around here. So we open a 3-minute position around this section, and if you've watched, you knew how to add the moving averages and the RSI. But here's the thing, if you want to add the RSI, you just come to this section, you can search for RSI, and here is a relative strength index. You can just add it. That's the RSI. We have already added it, so no need to add it again. And if you want to add the moving average, you also come, here's the moving average, you just click it, and then you can add whatever period it was, and that's it. So we open a position around here, we open an upward trend, or we buy around here. And the reason why we buy, based on the things that we just learned in this live stream or in this webinar, is that around this level, around this section, we can see that RSI cross above line 50, or RSI is above line 50, which is indicating that RSI is in the bias territory. RSI or the buyers are actually about to take control of the market. And around here, you can see that moving average, or the EMA 7, crosses above EMA 50, and you can see that it is also above EMA 14, which is indicating a bullish trend. And you can see that all the moving averages are looking up, or they are going in an upward direction, and that's why we think that the market is actually going up, and that's why we buy for 3 minutes. So we open for 3 minutes, and even if we enter for 5 minutes, we're still gonna win. So 3, 2, 1, win. So we have won the trade, and that's really great. So we have learned the lessons, and we put everything we learn into practice, and we test the market, and we have actually won the trade, which is great. Apologies guys, I have no idea that we do at that moment. I haven't opened that, so I'm gonna bring this down. So we have opened this position, and we have actually won the trade. And thank you guys. I really appreciate everyone for joining me tonight. I really appreciate everyone for coming into the live stream. Thank you guys for watching. Thank you guys for joining. If anybody has any question, you can still ask us. I will be in the Telegram chat group. But I hope you guys have learned a ton of valuable lessons in this live stream. I hope you learn how to use moving average. After this live stream, you know how to use moving average effectively. And I really hope that you learn a lot of valuable lessons in this live stream. And I want to make sure that you guys test these strategies, test moving average, and you can give me your experience. You can tell me how it worked out for you. You doesn't necessarily have to use all the 4 or all the 3 moving averages. You can just use 2 moving averages. You can use 3 moving averages. You can even use 1. But if you want to have the cross, you can use the 2 moving averages with RSI, which is gonna give you a better entry and a better confirmation of the market before you make an entry. So thank you guys for joining me tonight. Thank you guys for watching. Thank you guys for joining. I hope you learn a lot of lessons. I will see you in the next live stream. Make sure that if you enjoyed the video, you like this live stream, make sure that you click the like button, you like this live stream, you like this video, and make sure that if you are not subscribing to this channel, you click the subscribe button and you click the bell icon, so that you will not miss any future webinar that we have, or any future live stream that we're going to be having in this channel. And if you want to learn more about how to use the IQ option platform, there are a lot of videos that you can watch, and you can still watch some videos in the platform. And if you didn't have the IQ option account, click the link in the description of this live stream. Click the link in the description of this video. You can create your account using the link in the description of this video. And if you want to join the Telegram channel, if you're not in the Telegram channel, IQ option Africa and IQ option Global, you can just click the links in the description of this live stream.